Opening a Fidelity Roth IRA is what we're doing today. How are you guys doing today? My name is Apple, and today we are talking about Roth IRAs, what they are, why they're important, and how you can actually open one. We're going to go step by step through the process. I'm going to show you the screen on my computer, and we're going to go through it. So first of all, what even is a Roth IRA? Well, a lot of people get this idea in their head that a Roth IRA is some type of an investment, something that they can invest in. And people talk about investing in a Roth IRA. I think that phrase is a little bit misleading. I think a better phrase would be to invest within a Roth IRA, because what a Roth IRA is, at its most basic, it's an account. It is a type of an account that you can put money in and invest that money into really whatever you'd like. Anything from stocks to bonds to index funds, mutual funds, real estate, gold. There's just so many opportunities of things you can invest in within your Roth IRA, because putting money into a Roth IRA in itself is pretty much the same thing as just putting money into a bank account. The money's just gonna sit there unless you decide to do something with it. And in this case with a Roth IRA, what you can decide to do is to actually invest it into whatever you would like. So that's all well and good, but why do Roth IRAs even matter in the first place? Well, what it really comes down to is taxes. So in the United States, if you make money 9 times out of 10, probably 99 times out of 100, you're going to end up paying some of that money to the government in the form of taxes. If you're making a lot of money, that tax bracket is probably going to be higher, and you're going to be paying a larger portion of your income to the government. But the real draw of a Roth IRA is that you can make tax-free income. You can start building wealth without paying any taxes on this money that you're building. So essentially how a Roth IRA works is you make money at a job or doing something in some scenario where you pay taxes on that income. So if you go to a job, if you go to work, if you work at McDonald's, you are paying money to your state and your federal income tax, all right? So we've got that established, but with a Roth IRA, you're putting money into this account that you've already paid money on. You're working at McDonald's, you've paid taxes on this money already to the state, to the federal government. Now with your Roth IRA, you're putting in this after-tax money so that when you take this money out, so say you invest this money, you want it back when you retire, it's a retirement account. You want this money back when you retire. This money has grown in value. You have more money now than you did before. You pay no taxes on this money if you play by the Roth IRA rules. And the main Roth IRA rule is that you wait until you're 59 and a half to start taking money out. So as long as you play by that rule and a couple of the other ones, then you are going to be paying no taxes on this income, on this wealth that you're building. So this is really, really big, guys. And the biggest thing, the biggest draw to a Roth IRA, especially for young people, is you're probably in a lower tax bracket right now than you will be when you are older. So let me repeat that. You're probably in a lower tax bracket right now when you're young than you will be when you're older. This is for a couple of reasons. One is hopefully you're gonna be making more money when you're older, so you're gonna be in a higher tax bracket, you're making more money. That is the first reason. The second reason is because taxes are likely to rise going forward. I mean, we've been operating at a deficit forever, pretty much. So the government needs money. They're going to need more money as time goes on. So taxes are, I mean, I'm not going to say likely to rise, but I mean, there's a pretty high potential that taxes are going to rise. So that is another reason why you're going to be paying more taxes in the future than you would be today. So because you paid the taxes on this income already, when you're in that lower tax bracket, you can invest it, start building wealth, and then when you want that money back and you're in a higher tax bracket, you are paying no taxes. You already got that taxes out of the way. So this can save you, honestly, tens of thousands of dollars throughout the course of your life if you play your cards right with this Roth IRA. So now that you know that a Roth IRA is really just a type of retirement account, and the reason it's important is because it'll save you tens of thousands of dollars in taxes. Now let's hop over to the computer and show you guys how you can actually open a Roth IRA with Fidelity today. And just a quick disclaimer, I'm not giving any personal financial advice in this video, just information for you regarding how to open a Roth IRA investing account and why that might be a beneficial option for you. But again, consult with your financial advisor before you make any important financial decisions. And let's just learn a little bit about what Fidelity actually has to offer with their Roth IRA, and we'll learn a little bit more about what Roth IRAs actually are. So here we go. Like we were saying before, you make contributions with money on which you've already paid taxes. Your money then can potentially grow tax-free with tax-free withdrawals in retirement, provided that certain conditions are met. So that's exactly what we were talking about. That is the main draw to a Roth IRA, is that your earnings are tax-free if you play by the rules. And one thing I did actually forget to mention is that any money that you contribute to a Roth IRA, so let's say you open a Roth IRA, you put $1,000 in, you come back next year, it's now worth $1,100. That first $1,000 that you put in, you can take out whenever you want. And there's no penalty, no taxing, nothing. You don't have to wait till you're 59 and a half to mess with that first $1,000. Now, the key is when you take out your earnings, when you take out that $100 that you accumulated, that you earned in your investments, that is when you start to get hit with fees and penalties if you're not playing by the rules. So that initial money that you put in, if something does happen, if you get hit with an emergency, you have to pay medical bills or something, you can totally take out that initial money, but it's definitely not recommended. And I would definitely recommend keeping the money in there just to let compound interest really work its magic. So here we go. Tax advantages. Like we said, I mean, this is all pretty much stuff we've already covered, but account features. Eligibility. There's no age limit here, guys. So there are no excuses. You could be 12 years old watching this video, and if you have $100 in your bank account, you could put that in a Roth IRA, start seeing compound interest, and just like blow everybody out of the water if you start investing that early. So like there's no age limit. There's no excuses here. You don't have to be 18 years or older. So that is nothing that you have to worry about. You must have employment compensations. You must have to prove that you're making money somehow. But I mean, that could be, I was working at a family business pretty much since the age of like 13 or 14. So as long as you can prove that you're working somewhere, then you're fine with that. There are other requirements, whatever. Okay, so this is another important thing. So as of 2018, you can put $5,500 into your Roth IRA every single year. And I would highly recommend that you put in that total amount, that full amount, because that is going to allow you to see the most growth over time. And when you think about it, $5,500, it's really not that much. It might seem like a lot when you're in college and you're sort of living off of ramen, but in the grand scheme of things, $5,500 is not that much money, and you should definitely be able to allocate that much each year to your Roth IRA, especially because these earnings that you're going to be gaining are completely tax-free. So definitely try to allocate that full $5,500 to your Roth IRA every single year. There's no minimum to open this account. So again, no excuses, guys. If you are 12 years old and you have $100, you can open a Roth IRA and get started investing today. So there are no excuses for not opening a Roth IRA. Investment options, like we said, there are so many things you can invest in, from stocks to bonds to ETFs to mutual funds to REITs to CDs. Some of these are obviously better options than others, but there's a wide variety. I mean, anything you are looking to invest in, you can definitely do so with a Roth IRA and with a Fidelity Roth IRA. I should mention that I'm not really sponsored by Fidelity. I just have my Roth IRA through them, so I figured I would talk about what I know the most about and not just talk about some product that I've never used before. Okay, so access to a wide range of investments, we already covered that. And they're pretty good with customer support. When I first opened my Roth IRA, I guess it's been probably close to 2 years now, I really had no idea what was going on, and I was asking support all these stupid questions. But I got it figured out, and they were really willing to work with me. I just used the text chat feature. I think I don't know where it is on the website, but you can just chat with somebody. I mean, they have a phone number front and center on their website. But yeah, just chat with anybody, ask them all your stupid questions, and they will be very willing to help you. So once you have done that, they also have some great reviews, 4.4 stars, nearly 900 reviews. Looks pretty good to me. And then fees. Okay, we should go over these as well. So there's no maintenance fees. There's no account fees. There's no kind of fees for like maintaining your account. I think any account that's charging you like maintenance fees is probably not worth it. But where the fees are going to be is with trading. So anytime you want to buy or sell an investment, there's going to be a $4.95 fee. to get in and to get out. So in total, that's going to be $10 to both buy and sell your investment. So you got to keep that in mind. This is definitely on the lower end when it comes to your discount online brokers like Fidelity, Scottrade, Vanguard. Some of these guys are going to be about $10 per trade, but being at about $5 is definitely ahead of the bunch. Obviously, if you have a Robinhood account, you can invest, you can trade for no commissions, but Robinhood does not actually offer any retirement options yet. So for now, if you're looking for a retirement account, I think Fidelity is definitely the way to go, just because those commissions are so small and there are no other fees associated with this. It's completely free to open, completely free to use. There's no minimum requirements. So I think it's really, really nice. So if you want to actually open one, we would just go to open a Roth IRA and we would wait and we would say, are you already a Fidelity customer? You'd probably say no. You put in all your information, blah, blah, blah. You get started. And then now I'll just take you to a screen, to my Roth IRA, and we can look at what's going on over there. All right, so once you get your Roth IRA set up, you're going to be taken to a screen that looks something like this. This is just your main dashboard, your summary screen for your Roth IRA. It's going to give you all these cool graphs like your balance over the years, your retirement score. Not really sure how that's calculated, but apparently I'm on track for a good retirement. That's pretty reassuring, I guess. And then it'll give you some of your investments over here, but let me just take you to my positions. You can see where my Roth IRA is actually allocated right now. I haven't really messed with it in a while. I haven't contributed that much this year in 2018 yet. This is all pretty much contributions from 2017. But once I sort of figure out where I want to allocate my this $5,500 this year, I will do that. Also, I got 15 free trades from Fidelity. I mentioned that in one of my past videos. I'll link that up. But so I can really invest in whatever I want at this point without having to worry about paying any commissions. So we'll see what I do with that, with those. Those do expire at the end of 2018. So I'll get those used up some way, somehow. All right, so let's just walk through what this is really showing really quick. So, all right, so with our first, this guy is just how much cash I have in here. So this is just plain cash that's not invested in anything, sitting in here similar to a bank account. So I've got about $355 just sitting in here as liquid cash right now. So that's not too bad. I could buy up a few shares of Apple or something with that, but for now it's just sitting here until I figure out what I want to do with my contributions for the year of 2018. Now we've got some investments in Apple here. This is my biggest investment in my Roth IRA. I've got just over 14 shares of Apple. And the reason that it's not 14 even is because I've been reinvesting the dividends. So if you don't reinvest your dividends, I would highly recommend you do, because this is going to allow you to see the most power, the greatest power of compound interest taking effect. So I've been reinvesting my dividends, and they have amounted to just over 1/10 of a share of Apple, which is pretty nice. If I wasn't reinvesting those, they would just be added back to my 355 number up here. But since I do reinvest those, I'm getting additional shares of Apple every time they pay dividends. Next investment here is in Google. So I have 1 share of Google. And all of these guys are way up since I bought them last year, just because the market has been crazy. So these definitely aren't normal returns for a year of investing. So yeah, don't take that with anything. And then here we just have a Fidelity ETF that just tracks the NASDAQ. So it's a pretty basic index fund ETF right there. I've got just a little over 7 shares of that because, again, I'm reinvesting the dividends, as I would say is a good idea for most people. Obviously, I'm not giving any financial advice here. And then last, we've got some shares of Wynn Resorts, just a little over 4. And yeah, those are doing fine. There was that whole scandal with Wynn Resorts, but now we're doing all right. We were just up about $200. Yeah, just a little over $200 a little bit ago. So not too bad there. So this is just this is what your screen will look like when you have a Roth IRA. It's probably just going to be a bunch of this line at first, because this is going to be your dollars that you have in here, similar to a bank account. Now, if you want to actually invest this money, what you're going to do is head over to Trade, and you will select an account. So here's my Roth IRA. What we're going to do is, say we want to buy a stock. Say we want to buy some Apple stocks. So we will type in the ticker symbol for Apple, which is AAPL. And we will say we want to buy. We can only afford 1 right now, so we'll buy 1 of these. Order type, we'll just say market order to keep it simple. Time in force day would just mean that it'll buy whenever. And I will click preview order. And if I click place order, then my order would be placed to buy 1 share of Apple at this price. If that went through, that would add here, and then this would say 15.107. It would be subtracted from my 355 number. And that's just really how a Roth IRA works. So now that you know what a Roth IRA is, why it's important, and how to actually start one, after you start one, how to invest money in one, I really would say that opening one really early on would be a great idea, because you can take advantage of so much potential compounding, and maxing out a Roth IRA is always the best option in my opinion. If you are, I would say, under the age of 25, especially, probably even under the age of 30, just because you're probably in a lower tax bracket now than you will be when you get older. And then when you get older, there are different investment options that are going to be better for you than a Roth IRA, because then you're going to be in a higher tax bracket. And we can talk about those in a future video. Anyways, guys, my name is Apple Kreider. Thank you very much for sticking around. If you made it all the way to the end, be sure to leave a like and subscribe down below. I really would appreciate that. And let me know in the comments what you would want to see in a future video. Maybe walking through how to open a brokerage account or some other type of investment account. I could definitely go through that for you guys. Anyways, I'll see you guys tomorrow, and until next time.